This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. These are your top stories this hour. Investors are watching Middle East tensions after Israel launches what it calls a preemptive strike on Hezbollah in southern Lebanon. A mixed open ahead for Asian stocks this week, featuring Nvidia's earnings and key inflation data from Japan and the US. The Fed chief's Jackson Hole's speech all but locking in that rate cut. Plus, South Korea confident that Washington will keep helping it confront the nuclear threat from the north, regardless of the election outcome. We hear exclusively from the Vice Unification Minister.
Haidi is all about Jackson Hole and what Chair Powell said, of course, that pivot when it comes to that potential rate cut in September, saying that the time has come for an adjustment in policy. He sounded more confident about inflation being reined in. And of course, we will be watching those PCE, the Fed's preferred gauge of inflation, later in the week as well. But take a listen to what exactly he said.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
And that's really, as you mentioned, really what we're watching out for this week in terms of what's being seen as just a gradual reinforcement of these rate cut expectations, right, which is the preferred price gauge from the Fed. It comes amidst really a pretty heavy week, I should say, of eco data around the globe. But we also heard from other Fed speakers. Take a listen to what Austin Goolsbee had to say, particularly when it comes to the characterization of this part of the cycle and perhaps some further volatility on this way down.
I think that this reflects the reality of the economy, that we've got to keep our eye on the employment side of the mandate now. This is what the path down to 2% inflation looks like. You know, you got some bumps, but I think that side's looking a lot better.
Policymakers, of course, watching very closely the labor market data as well. And those comments on the cooling labor data are really what caught investors' attention. Take a look at how U.S. futures are coming online in the Asian session. A little bit of downside after we saw stocks and bonds rallying on the Friday session. The Magnificent Seven leading those gains. Nvidia reporting earnings later in the week. Of course, that's a big one of this earnings season. And we saw the two-year yield also breaking through the 4% level. But take a look at the dollar index, which is unchanged at the moment after we saw that significant decline over the past few weeks. Take a look at how Asian futures are coming online. Of course, we had a lot of fluctuation in the Japanese market, given that Governor Kazuo Ueda was also speaking in Parliament on Friday. We saw gains on the Nikkei for 2 consecutive sessions. We could see a little bit of downside at the open in Asia, down 0.7%. In the future space, we're seeing a little bit of upside for Australian futures at the moment, but the Japanese yen holding below that 144 level against the U.S. dollar. But Haidi, of course, will be watching very closely all of the oil pricing, given that, of course, geopolitical tensions continue to rise in the Middle East.
We are really on edge, right? Let's get some more when it comes to the latest that we know with Bloomberg's Michael Heath. So really, we're seeing sort of this preemptive moves. It's been a few weeks of sort of, unease, and it does seem like things are starting to heat up again.
Yeah, well, heat up, or perhaps we might have a pause here for now as well. I mean, Israel obviously has struck Hezbollah positions. It was a preemptive strike. About 100 jets went in at 5 a.m. Israeli time, and they seem to have just preempted Hezbollah's retaliation for the killing of that senior commander. So Hezbollah then struck after, then did fire off a bunch of missiles and drones, which haven't done a lot of damage. One Israeli soldier was killed. And Hezbollah seems to be indicating that that's the first stage of its retaliation for this. So we're going to probably have a bit of a period of calm here. But again, it's a sort of a credit to the Israeli intelligence agencies that they've managed to track this down and cut off at least part of this attack that's occurred. At the same time, though, we've got peace negotiations still sort of going on in Cairo as well. I mean, how much you can read into that, I'm not sure whether much will come out of it. But what seems to be happening, and certainly with this Israeli preemption and the response from Hezbollah, as we've seen from both Iran and Hezbollah, that they talk a good game, but they don't really overstep the line in what would sort of send us into a regional war. Now, you never say never in the Middle East. Anything could happen, immediately after. But at this stage, that seems to be what it looks like.
You mentioned Cairo. The U.S. has also stepped up its presence. What can you tell us about the international reaction so far and what movements we could expect to see in the coming days?
Yeah, Shery. I mean, the US has moved aircraft carriers closer to the region. It's fairly obviously trying to deter Iran, which still says that it plans to respond to the assassination of a Hamas leader in Tehran. And so, yeah, and then we have these talks going on as well. So, look, the US is very hopeful on this. Hamas and Israel, do they benefit from this going on? I mean, the issue is Prime Minister Netanyahu, he still has this right-wing cabinet. The ministers that help keep him in power have no interest in a ceasefire, etc. The talk is also that Israel wants this corridor that separates Gaza from Egypt to stop smuggling going on there. Hamas obviously wants Israel out of the whole of Gaza. So the same sort of issues still keep cropping up. Now, it's going to take something special to bridge that gap, which has been the same sort of issues that have been going on for the past 3 months or so. But certainly from all sides, the worry still remains, what will Iran do and will Hezbollah follow up here again?
As you say, there's keenness to reach the ceasefire, but a lot of sticking points, and certainly there's some doubts that it will get done right. Has there been much sort of thought on what happens after a ceasefire, if it does happen to be, a semi-permanent or permanent one? Is there any thought about, what the sort of reconstruction view might look like, given the number of settlers that we know are in the area?
Yeah, I mean, well, look, I mean that is hard enough to sort of get to the deal, but the next stage, I mean, the Biden administration's dream is that from there they start to move to sort of some sort of broader agreement. Which would lay the basis of a Palestinian state, but that just seems so far off now that it's very, very difficult to see that occurring. I mean, basically Gaza's been levelled, so the amount of money that's going to be required there, I mean, presumably Saudi Arabia has tapped these countries as well, but they're going to want to be confident that there's a secure, that things are sort of stable there and they're not pouring money down the drain as well in terms of a flare-up in fighting again that leads to more destruction. But that still, where we get to after here seems so far away as well, just because it's taken so long to try to even get this close to the negotiations, and we still seem a long way apart.
Back at Tamako there with the latest. Let's get some analysis when it comes to how all of this is playing out with global risk sentiment and, of course, what it potentially means for global energy markets and oil prices. Diana Mousina is joining us here in Sydney. Diana, taking a look at, I guess, the implications of geopolitical risk across the Middle East, markets are very good at, discounting risk at the moment, right? Do you think there is that sort of volatility hanging over, in particular when it comes to the inflationary impact of energy markets becoming disrupted?
I think in the last few months we've seen that markets are probably a bit less sensitive to those risks in the Middle East than perhaps they were around October or November last year when the conflict broke out. We haven't seen oil prices tick up much higher on increased risk when we do get a flare-up in the region. So I think the major factors that are driving markets are more around what's going on with interest rates and what the Fed is talking about in terms of its projected outlook for rates the next 6 months.
And of course, Chair Powell couldn't have been sort of clearer, I guess, in the sense of what's to be expected. The market always sort of wants more, though. Do you think it's sort of pretty steady travels going into September and the rest of the year from here in terms of Fed policy and the implications for Asia?
What was missing, I suppose, from Powell's speech and also from what the other Fed members said last week was basically around the level of movements that will happen. So are we going to get a 25 or a 50 basis point cut in September? And then what is the outlook from there? How many rate cuts should we expect over the next 12 months? That was still unclear from all the communication that we've had from the Fed. So basically it just says that the Fed is very data dependent and it will shift policy based on... As they've always been, but probably more so now in this cycle because I think a lot of the central banks are sort of going a bit blind because this cycle is a little bit different to some of the more recent ones that we've had.
And I guess the question is which data points, right? Because we have one jobs report and 2 inflation points also coming up, but we continue to hear this narrative around the cooling labor market and the concerns around that.
Well, it was very clear from Powell's speech that they are concerned about the labour market right now. They don't want to see too much further cooling. The problem, though, is in the US, when the unemployment rate starts going up, usually it goes up quite quickly and to a much higher level compared to where it bottomed at. So this is where investors are finding the risk, that they're worried the unemployment rates are 4.2%, but it could easily go to 4.6 or 5% in the next 12 months. The Fed doesn't want to see that.
We have seen the manufacturing numbers around the world also weaken, and given that it's sort of a services indicator as well, how much of a concern is this given the sheer size of the service industry in the United States?
Well, the issue with some of the PMIs that you're speaking about, Shery, is that usually services tends to take its lead from what happens in manufacturing. So the fact that manufacturing is now in negative, it's contracting around the world, and in particular in the US and the Eurozone, that's a risk for the services sector, because it means that services activity is probably likely to soften over the next few months. And that means that growth is going to cool in the US as well. Now, part of that is expected because we've got high interest rates. But the issue is that how much will growth slow? We don't want to see a recession occurring or a major downturn. But obviously, that's a big risk in the next 12 months. There's probably a 50% chance of a recession in the US.
And talking about manufacturing, let's talk a little bit about semiconductor manufacturing. We have NVIDIA results coming up. This seems to be the big one of the season. Will you be paying close attention to this? What will you be watching out for?
Absolutely. It's probably the most important company in the world right now. And it will give a good, I guess, leading guide to the sentiment around the tech industry right now. In the last few weeks, a lot of the volatility that we had in share markets, and one of the big reasons for the drop in global shares, in particular the US, was fear that the tech sector had made too many gains, or that share prices had kind of gone too far. So I think it will kind of set markets up for what to expect for the tech sector. That's 40% of the US S&P 500. So it will be quite important in terms of what the forward earnings projections are and how they come in relative to analyst expectations.
Have you changed your view on China at all? I mean, it seems like a sort of a steady, managed slowdown is almost where policymakers are comfortable being at the moment.
The Chinese economy is very diverse right now. So there are parts that still look very concerning. Property investment is still down 20% year on year. Consumer spending is still soft. That has negative implications for Australia because we used to rely on a lot of Chinese tourists to come in, and they haven't gone back to their pre-COVID levels. At the same time, parts of China are doing quite well. The new economy, so electric vehicles, solar panels, fixed asset investment, some manufacturing. There are parts of China that I think we shouldn't get too negative on. I think 5% growth for the Chinese economy looks quite reasonable. What I guess I'm more worried about is what happens to the iron ore price. If we see some further drops in the iron ore price, that would be negative for Australian income from a trade point of view. But so far it's holding up around the $90 mark. So I think at that level, it's okay in terms of the revenue that is brought into Australia.
You talked about some of the parts that are doing well when it comes to the Chinese economy. Things like EVs, solar, new economy. Xi obviously needs to rely on this to rejuvenate growth. These are also the targets for potentially a new US administration, or more of the coalition of Western powers that have already been quite irate by this. Is that a risk, do you think, for China?
It's a risk for China, but also for the rest of the world, because the US is talking about not just imports on Chinese products, but also on all imports. So some of the cars that come out of Europe, this has been a focus for the US administration in the past 4 years as well. What's interesting about Trump's rhetoric, though, is he's talking less about actual tariffs and more just about expanding US manufacturing and bringing more jobs into that sector. So I sort of wonder if he was using the tariff route as sort of a bit of a negotiation, and he will be using that as a tactic if he gets re-elected. Whether we actually get those tariffs put in place, or whether some people think that he might potentially get China to invest directly into the US economy. So I'm not actually sure if we get a Trump presidency, if we get those tariffs put in place.
Diana Mousina, Deputy Chief Economist at AMP, here with us. Coming up next on the Asia Trade, the CEO of e-scooter startup Lime joins us live. The Uber-backed company entering the Japanese market. We'll also be talking market strategy with VBP and ANZ. Traders are debating now, of course, the size and path of the Fed's rate cuts and weighing the escalating tensions in the Middle East too. This is Bloomberg. Well, the messaging app Telegram has questioned the grounds for the detention of its CEO. Pavel Durov was taken into custody in Paris, at the airport over the weekend. Our tech reporter Annabelle Julius joins us now. So, what exactly has happened? Because there's obviously some rules in terms of how long he can be detained for. That can be rolled over. Have we heard about what the underlying sort of allegations might be?
Yeah, well, you actually have seen that detention already rolled over, which means that he could be facing court on Monday. But just backtracking a little bit and talking about what happened over the weekend. So Pavel Durov, he's someone who established Telegram back in 2013 with his brother. He's Russian by birth, but we don't actually know if he's given up that citizenship. It does play into the story a little bit later on. But essentially, he was detained at Le Bourget over the weekend, which is an airport on the outskirts of Paris. All of this was first reported by the AFP, but they're saying that there was suspicion that he failed to take steps to prevent criminal use of Telegram. Now, Telegram as a messaging app, many people would be familiar with it, but it has been often linked to extremist activity online. It's seen as being quite light touch on content moderation as well. And that's a way that this really misinformation, for instance, can kind of spread like wildfire on it. And so authorities are becoming much more aware of this now. And we saw, for instance, the UK, for instance, talking about it and its role and its prominence in those anti-immigrant riots back in August, earlier this month. Now, the French authorities apparently are as well taking notice here, because the AFP says that OVMIN, which is an agency set up to combat violence against minors, they're the ones that are said to have established this arrest warrant for Durov.
What have we heard from Telegram?
Yeah, they actually put out a response in the last couple of hours, and kind of, as you might expect, they're saying that essentially that they abide by all of the laws in the EU, that they do actually have high content moderation standards that are improving as well. They do make note of that in their statement. They are saying that the CEO has nothing to hide, that he travels across Europe frequently, and that they're also, you can see this response here, but they're also awaiting a prompt resolution of the situation. Toncoin, which is actually a cryptocurrency linked to Telegram, did slide pretty significantly off the back of this, down more than 20%. So there is a clear market reaction and nervousness around this as well.
So this has caught global attention. Authorities are now involved. So what's next here?
Well, as Haidi was saying there before, that we did see that arrest warrant extended, and so it does mean that Durov could face the courts on Monday. We are as well hearing from the Russian embassy in Paris, and that's what I was saying before. Durov is Russian by birth, rather. He does have citizenship in France and the UAE now. It's unclear whether he's renounced his Russian citizenship, but we are still hearing from Russian officials, and they're saying that they do want an explanation for the reasons, and also demanded that they ensure the protection of his rights and provide consular access. So certainly very much a moving story, but it does seem that we'll hear a lot more perhaps later Monday if Durov does appear before the courts.
Annabelle Julius there joining us from Sydney. And we have more top stories on the corporate front. New Boeing CEO Kelly Ortberg faces questions over the future of the firm's Starliner program after NASA turned to SpaceX to return astronauts stuck on the International Space Station. NASA announced the decision after weeks of testing and debate over Boeing's faulty spacecraft. It's the latest blow for Boeing in a year that's also included a cabin blowout, federal investigations, and an executive shakeup. China's top oil refiner Sinopec has reported a marginal increase in first-half profit. The company says its net income for the first 6 months reached $5 billion, marking an almost 2% gain from a year earlier. That's after better performance from its upstream operations offset weakness in refining and petrochemicals. And coming up next, our exclusive interview with South Korea's Vice Unification Minister on how the U.S. elections could play out for relations with the North. This is Bloomberg. Chicago Fed President Austin Goolsbee says it's time for the central bank to pay more attention to the cooling U.S. jobs market, with inflation now easing toward the Fed's 2% target. Speaking to us at Jackson Hole, Goolsbee declined to say whether he would favor cutting rates at the Fed's September meeting.
I think we set a rate pretty tight more than a year ago. Inflation's kept coming down, so in the real rate sense, we've been tightening, and when the conditions are not overheating, you got to be really careful with that kind of passive tightening. Seemed pretty definitive, the statements that Chair Powell made there in his remarks, and I think that this reflects the reality of the economy, that we've got to keep our eye on the employment side of the mandate now. This is what the path down to 2% inflation looks like. You know, you got some bumps, but I think that side's looking a lot better.
As you say, you've been worried about being too tight for a while now. The chair did not discuss how big of a cut might be coming for the first one. What do you think the economy needs? Do you need to see 50 basis points?
You know, I don't like ahead of time, as you know, picking out specific numbers. In my view, the SEPs over the last year have made pretty clear that almost everyone on the committee thinks that conditions will show inflation coming down, the unemployment rate going up gradually and settling in, and that there will be multiple cuts over calendar 24 and calendar 25. And that feels like what the path is from conditions so far to me.
Well, we start down the golden path, or as the chair would say, the golden road to unlimited devotion. How fast do you move? Do you think you need to be gradual? Are you open to bigger moves if the data suggests?
Look, you've seen many times the size of the table. It's a big enough table in the FOMC room that you can fit everything on the table. I think we should always put everything on the table, and what will warrant the speed at which we cut rates or how much we pause on the cutting will be determined by how the totality of the conditions show. I think there are definitely warning signs, though there are also signs of strength. So on the warning category, the unemployment rate drifting up is definitely a warning sign. If you look at the delinquencies on credit cards, if you look at small business defaults, all of those are in the warning category. On the stronger category, GDP growth's been pretty robust. Consumer spending still pretty strong, driven by, I think, this robust wage growth. So we just got to watch the whole thing.
Chicago Fed President Austin Goolsbee there speaking with Bloomberg's Mike Mickey at Jackson Hole. Really the ponderance of the Fed's path forward now that Jay Powell has very clearly signalled the path, I guess, if not the scale of what they might do, is what we're watching when it comes to the start of trading here in Asia. We're seeing dollar yen in particular pushing lower on Monday, even before those fixings are sort of out of the way. So clearly we're seeing not just equity bulls, but also yen bulls focusing on that messaging from Governor Ueda that more policy tightening lies ahead. This is Bloomberg.
Bank of China says its president Liu Jin has stepped down after a little more than 3 years in the job. Let's bring in our China correspondent Mingmin Lo in Hong Kong. So what else do we know about the reasons for this resignation?
Yeah, we don't have a lot of insight as to the reason behind his resignation. What we know is from a stock exchange filing that the company had filed saying that he had resigned. This was a few days after he was absent from a board meeting. The stock exchange filing said that there was no disagreement with the board and there are no matters that need to be raised to the attention of shareholders. And in the meantime, the current chairman, Ge Haijiao, will be acting president for the the bank. Now, the broader context here is that back in late April, the central government had kicked off an anti-corruption probe into the financial industry, targeting 34 entities, including the central bank, the regulators, some of the big state-owned banks, for instance. It was meant to conclude in about 3 months, which would have been around late July. And at the same time, one former chairman of the BOC, Liu Jin, he was also on trial earlier this year on corruption charges for accepting bribes of about $17 million from 2010 to 2023. That's according to prosecutors. He was put on a probe in March of last year. And we know that presidency has been kind of doubling down on this anti-corruption probe as he attempts to rein in risk in the financial industry. And the last time we saw such a huge probe was back in 2021 that had sent shockwaves through the financial industry, with over 130 financial officials and executives that were ensnared in that probe, some of whom had been sentenced to suspended death sentence, and at least one had been executed as well. So this is the broader context at which this is happening, although we really have no idea what led to the resignation of Liu Jin just after 3 years after he came into that role.
We're also hearing from the PBOC talking about these financial risks across key areas that they're being, resolved in an orderly manner. We know that these stress tests are ongoing as well. What more do we have in terms of the context of what's going on and what risks they have identified?
Yeah, so the PBOC Governor Pang Gong-shen had an interview with state media. It was aired over the weekend, and he gave us a little bit more details as to what the PBOC plans to do to support the economy. He did mention when it comes to those risks, the number of high-risk small and medium-sized banks have halved from its peak. In the meantime, he said the PBOC will be trying to promote credit growth, and this comes after we had that first contraction in 19 years when it comes to new loans to the real economy. He also talked about the need to maintain stability of the yuan in a balanced manner, and so far we have seen the PBOC really drawing back support of the yuan, suggesting that they maybe don't want the yuan to strengthen too quickly. This comes also as the foreign exchange regulator had been surveying the big banks to find out what clients are saying about the impact of a stronger yuan on export orders and profits as well. And he also talked about stable reduction in financing costs. We've seen the PBOC try to shift emphasis more to the 7 days reverse repo rate to try to mimic what other central banks do. It had cut interest rates unexpectedly back in July. We're expecting more cuts later this year, and some economists expecting maybe 10, 20, even 30 basis point cuts later this year, depending on how the economy goes. And now local reports are also saying that the central bank is looking to conduct stress tests for these banks when it comes to bond risk exposures to see how they would respond if in a hypothetical scenario where the interest rates are raised maybe 10, 20, even 50 basis points, and whether they will be able to respond well to that kind of pressure.
Bloomberg's China correspondent Min Lo there with the latest on China. As we continue to watch, of course, geopolitical dynamics across Asia ahead of the U.S. presidential elections. South Korea says it expects to work with whoever it takes the White House to confront the nuclear threat from North Korea. I spoke with South Korea's Vice Unification Minister Kim Soo-Kyung in her first interview with international media and asked how Seoul is preparing for a new administration in Washington.
Recently, I read the news that the U.S. Democratic Party platform removed the goal of denuclearization of the Korean Peninsula. So people in South Korea is kind of worried what happens after the president election in the U.S. But we strongly believe that our alliance between the U.S. and South Korea is stronger than ever. And regardless of the outcome of the president election, we are going to deter North Korea's threat of nuclear weapons based on the strong alliance between two countries. So we are not that worried about what happens after the U.S. election.
Especially if you look back a few years and under the Trump presidency, we actually saw more dialogue between Washington and Pyongyang. But then at the same time, there was a little bit of concern that Seoul had just been taken out of the equation. Is that a concern that's still around here in South Korea, depending on who wins?
We have believe that we have the strong systematic alliance between two countries. So no matter who is going to be elected, I think, or our government believes strongly that those two countries will closely work together to deter North Korea's nuclear programs. So we are not much worried about it. We are going to take the lead in implementing peace on the Korean Peninsula. We are not going to be ruled out.
The global order seems to be changing now. There's a lot of movement, especially with the ongoing war in Ukraine. It's been really interesting to see the closer relationship between North Korea and Russia. What are Seoul's thoughts about that?
So as you know, recently Russian President Putin visited Pyongyang in 24 years for the first time, and they signed a new treaty and upgraded their bilateral relationship centered on military cooperation. And we are worried that, or there is a deep concern that this kind of military cooperation can happen not only in times of emergency, but also in times of peace. So we are so much worried about it. And we believe that we have to work closely together with the international community and to deter nuclear threats from North Korea, and any kind of military cooperation between those two countries that strengthens the military capacity of North Korea is a violation of UN Security Council resolutions. So we need to work closely together with the international community, not to make bad things happen in between those two countries.
North Koreans have tried to escape the regime for a very long time, which is why we've seen so many defectors over the years, and yet that number seems to have sharply dropped. What role does Seoul think that China is playing there?
China is the place where many defectors are going through to come to South Korea. So if China is tightening control over these North Korean people and force them to go back to North Korea, then the number of defectors drops. If China closes their eyes to these North Korean people just go through their land, then we have higher number of defectors. So China is kind of a very important factor in deciding the number of North Korean defectors coming to South Korea. And recently, like defectors from the elite group, we call it, for example, diplomats or students or training company workers who were dispatched abroad. The number of these elite group defectors is now increasing. So this means that there is a high demand for defection, but it is really hard to cross the border because North Korea is tightening control over the borderline. So it is almost impossible to cross the China and North Korea borderlines to defect from North Korea.
South Korea's Vice Unification Minister Kim Soo-Kyung there. We have more ahead on the Asia trade. This is Bloomberg. Assets are trading ahead of the Japan Open. We are seeing the Japanese yen holding steady. This, of course, as we had the Nikkei and the topics gain ground for 2 consecutive sessions. It's really all about the Japanese yen and its strength right now against the U.S. dollar, given, of course, what we heard from Governor Kazuo Ueda last week, and investors just trying to digest what's happening with Fed policy as well. Bloomberg's Japan and Korea economy and government editor Yuko Takeo joins us for more on this. And really, Yuko, it's such a volatile time for the Japanese yen, right? And this is a currency that we weren't watching that closely years ago. And now you have so many different factors just being weighed by markets.
Sure. There's quite a few factors that's moving the yen at the moment. If you look at things this morning, one factor is obviously Fed Chair Powell said on Friday that he essentially said that a rate cut's coming next month. Also, developments in the Middle East has traders essentially being worried about further conflict erupting in the region. And lastly, of course, on Friday, BOJ Governor Ueda also spoke, and he essentially made investors aware that a rate hike is still on the table. So those things are together strengthening the yen.
What is going on with Governor Ueda? And really, that hearing a special session in Parliament on Friday at a time when everybody else was in Jackson Hole, wouldn't this have been a really good time to speak to international markets?
Right, it really would have been, and he missed out a session where he could have spoken to the international markets for a session that ended up not making too much news, and it's probably good for him in the sense that he probably did not want volatility at that point. He kind of succeeded in being not too dovish, not too hawkish. So from the BOJ's perspective, yes, it worked out in that they didn't cause any further volatility there, but he did miss out on a chance to probably talk to the international markets there.
Yeah, we'll be scouring any chance that we get when it comes to those comments by BOJ Governor Ueda. Our economy and government editor Yuko Takeo here with a look at what's happening with the Japanese markets. But let's stay here because we have another story that we're tracking in this country. E-scooter company Lime has just launched its service in Japan in a foray that pits the Uber-backed startup against a homegrown rival, Loop. Let's get more on Lime's Asian ambitions with CEO Wayne Ting, who joins us now from New York. Wayne, great to have you with us. I've seen these Loop scooters since I arrived here in Tokyo. Tell us how your company could have a competitive edge against an already established name here.
Yeah, thank you so much for having me. I think Lime is the world's leader in micromobility. So think about e-bikes and e-scooters. We're in 300 cities around the world, 34 countries, and we are the market leader in almost every geography. We're the #1 player in Europe, in North America, and in Australia and New Zealand. And the reason why we're the leader is because we've always developed our own hardware in-house. And I think one of the big advantages that we will have and what we're bringing to the Tokyo market is best-in-class hardware, best-in-class scooters and e-bikes. In fact, we're bringing a sit-down scooter that we just developed to the Japanese market. All the other competitors buy the same off-the-shelf, often cheap e-bikes, e-scooters. And I think when Tokyo residents take a chance on a Lime scooter and e-bike, they're going to experience the difference in the quality of the hardware that is designed for safety, rideability, and sustainability.
So when you retreated from the South Korean market recently as well, so why Japan and what makes Japan different then?
Yeah, so we left the Korean market at the beginning of COVID. It was a very difficult time for any form of transportation business, and we had to pull back to make sure that Lime is in a strong financial position. And I would say the last 2 years, we actually delivered record top line and record profits. Last year, our global profitability neared almost $100 million. And this is a great time for us to invest in that momentum. And this is why we're taking a look at East Asia again. The other thing I would say that differentiates that Japan actually has a more clear regulation. We would love to go back to Korea if the regulations in South Korea could be updated to ensure that there is a high bar for operators, that it is not so easy for anybody to launch operations locally. And it would ensure a level playing field with other operators. We would love to, as part of this launch in East Asia, to take another look at Korea if there's updated and more fair regulations. But we think that given the global momentum that Lime is achieving through record profits and record profitability, as well as new e-bikes we're launching this year, we think it's a perfect time to take a look at Japan and the East Asia market again.
Wayne, it's interesting. I read that you were talking about the last thing you want to feel like is expanding too fast and feeling like a nuisance, right? And I think a lot of people in a lot of these markets, including in Australia, be it you talk about scooter sharing or just bicycle sharing, is that it does feel like a nuisance in the way that it seems largely unregulated. Do you think regulation is key to making this a sustainable kind of business? And I suppose other than Japan, which other markets do you see that level of clarity on the regulatory front already in place?
Yeah, we think regulations is super important. And actually, in almost every market, there are strong regulations and very high bar for which operators can win the right to operate. In Australia, for example, there are competitive RFP processes in all the cities, whether it's Brisbane or Melbourne, that really regulates not just who can operate, but also the rules of the road once you're there. And we think good regulations is crucial to ensure that we are winning over not just local residents, but as well as people who don't use Lime or don't use micromobility. So we are big supporters of good regulations, and we work hand in hand with local city officials to ensure that we have good, fair regulations in all the markets we're in.
Which other markets would you be looking at next?
So this is a big year of expansion for Lime because of the momentum that we're seeing. So in addition to Japan, we also launched Greece this year to capture a lot of the summer tourism in the local market within Greece. We think almost every big city can benefit from micromobility because we really bring a cheaper, greener, oftentimes faster mode of transportation. Any city that suffers from parking issues, congestion issues, and every city in the world suffers from the challenges of climate change. Every city that goes through this can benefit from a greener transportation system, which is what Lime brings. So we think we're in 34 countries now, so there's still many, many markets where Lime is not in. We are already in a lot of countries and cities, and we think every country and city can benefit from the type of green transportation alternatives that Lime offers.
You're backed by Uber. Tell us a little bit about your funding structure if you need to raise more capital at some point, and what are the plans right now for how you plan to really return to actually really boost your business and profitability, I guess.
Yeah, so we are very lucky to have the backing of Uber. Uber is our biggest investor, and we have a global partnership with Uber where you can even book a Lime scooter and bike directly in the Uber app. We're very grateful for Uber's support, and we think that's going to continue to be a very, very strong partnership for us. The great thing about what we achieved last year, almost $97 million at EBITDA, is that we don't need to raise any more money. We have a strong balance sheet and a strong P&L. And as we continue to improve our profitability, we can fund our own growth through the profits that we generate, which is why we are looking at new countries this year without raising new money. We feel very, very good about our financial position, and we think we can continue to fund our growth and expansion through our own profitability. And we're going to continue to build new hardware, better operations to ensure that we continue to expand our margins.
Sounds like it's a good time for an IPO, maybe.
Yes, well, I think when we think about IPO, there's two factors. One is our own financial performance and making sure that we're ready to live as a publicly traded company. I certainly think the financial results that we delivered last year continues to put Lime in a strong position to live as a publicly traded company. The second factor, however, is the macro situation with IPO markets. And you guys know better than I do, but it still feels quite choppy. So we are doing everything we can to grow the business, to invest, to ensure that Lime is the global leader in micromobility. And I think the investments this year in Japan and Greece, the new hardware that we're building, all builds towards that global leadership. We're going to continue to make our P&L better. And when the IPO market is back and open, we'll be ready to take advantage of that.
Wayne, great to have you with us. Wayne Ting, who's a Lime CEO. You can catch Japan Ahead every Monday here on The Age of Trade. This is Bloomberg. Big earnings week for Australia's minerals sector. Iron ore heavyweights BHP, Fortescue among those who are reporting results. Paul Allen's here with a preview. So what are you watching?
Yeah, well, BHP, the big one tomorrow, and expected to be a pretty healthy set of numbers considering underlying profits supposed to hit a record. Well, it's expected to $13.5 billion. And this is despite pressure from the slipping iron ore price. To that regard, we've got Fortescue later in the week, and of course iron ore is its only product, so operating profit there is expected to be flat. So the outlook here is a bit concerning, especially when it comes to China demand, so we'll be looking for commentary around that. MySteel has just reported that only 1% of Chinese steel mills are profitable at the moment. Goldman says that the iron ore outlook fundamentally remains bleak, so not exactly ringing endorsements here. The big players, though, are insulated to some degree. They've got pretty low costs of production, but others not so much. We'll be hearing from a smaller player, Minres, later in the week. The AFR just reported that one of its mines is only making $8 profit per tonne, even with iron ore around the $100 mark. So if the prices keep falling, and they are expected to, some of these marginal players could be in a bit of trouble.
Pilbara Minerals numbers are pretty confronting for the full year. How much pressure does this kind of tell us they're under at the moment?
Yeah, Pilbara, the lithium miner, saw a full year profit slump, net income down 89% to $174 million. Weak lithium prices in this case, so down 70% during the period. There's a lot of supply. And pretty bad timing as well. Pilbara just opened the world's largest lithium sorting facility and is weighing an expansion of that. The CEO said that this is strategic, it's counter-cyclical, it's going to diversify the portfolio. Well, it'll do all of those things, but in the short term it's weighing on the bottom line. Later this week we'll hear from Woodside, South 32, the rare earths miner Lynas as well. And of course all of these companies facing the same sort of thing, weaker commodities prices.
Bloomberg's Paul Allen there. We'll be getting, hopefully, some of those answers from the Pilbara Minerals CEO, Dale Henderson, when we talk to him about that plunge in full-year net income, the broader outlook. That's coming up at 9:30 a.m. Hong Kong time, 11:30 here in Sydney. But we are just minutes away from the market opens in Sydney, Seoul and Tokyo next. We're expecting Asian stocks broadly to get that bump from a little bit more assurance after Jackson Hole, after Chair Powell's speech, really talking about the path to, signals of that path to US interest rates coming down from next month. We are seeing some upside when it comes to futures from Hong Kong to Sydney. Equity benchmarks on the rise. Tokyo shares, though, may see a little bit more volatility. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. After Haidi, we saw U.S. stocks and bonds rallying. Of course, the expectation of that rate cut come September very clear with Chair Powell's speech in Jackson Hole.
Yeah, and I suppose the only point where perhaps markets want to see more clarity, wouldn't we all, is really about the point of the magnitude, the scale, right? He refrained from talking about whether it's going to be 25 or 50, suggesting, as we've been hearing, that reaction from economists and investors that he will continue to be very data dependent. And interesting, I thought, hearing from Austin Goolsbee as well, talking about that this part of, the cycle on the way down is bound to be sort of peppered with some bumps and volatility.
Yeah, of course, we have seen that volatility, especially when it comes to the Japanese markets. Recently, we are seeing a little bit more strength on the Japanese yen, but this, of course, after incredible weakness for the month of July. And take a look at how the Japanese stock markets are coming online, with the Nikkei and the Topix gaining about 0.5% each. Of course, we saw also those gains in the past two sessions last week, as we had the Japanese yen also strengthening a little bit. We're holding below that 144 level against the U.S. dollar. We were listening to Governor Kazuo Ueda speaking in a special session in Parliament on Friday. Really not much new out of that conversation, but just more expectations that those rate hikes are still on the table. We continue to watch those JGB yields, a 10-year yield below that 0.9%, but really it's about the conversation and what's happening over at the Federal Reserve and the U.S. dollar weakness that we continue to see. Take a look at how the Korean market is coming online on the back of that dollar weakness that we are now seeing at the weakest level against since January of this year. The Korean won also a little bit stronger on the back of that, at that 13.24 level, and the Kospi also rebounding from those losses that we saw in the previous session. Haidi, of course, Korean markets also trying to factor in where the BOK goes from here. We do have industrial production numbers later in the week.
Take a look at how we're setting up when it comes to Australia. And Shery, we were talking earlier, it is a big week when it comes to earnings, particularly when it comes to the big miners, BHP among them. Pilbara Minerals had a fairly nasty set of numbers, came out earlier. Fortescue as well. So really getting that sort of proxy gauge of the weakness that we have seen coming out of China and Chinese steel mills. Take a look at what we're watching when it comes to just that staggered open here. Looking like we're sort of mildly optimistic. We have had quite a string of wins when it comes to the ASX 200, of course, taking a breather into the end of that week. The Aussie dollar is also a bit on the back foot, 67.87. Australian bonds, though, one to watch. We've seen this relentless rally when it comes to Aussie bonds, really showing really just how few traders apparently believe that the RBA will be defying pressure to stand firm on its hawkish tone. So watching for further commentary out of the RBA, particularly as we've seen the RBNZ really kind of capitulate, and now clear signals from the Fed there as well. We're also watching Endeavour Group as one to watch in terms of reporting earnings. Treasuries are holding pretty steady at this point as we kind of continue to watch the debate when it comes to the size and the path of rate cuts after the Jackson Hole pivot speech from Chair Powell. Also watching, of course, oil and some of the further developments when it comes to Middle East tensions. We're seeing that rise in Brent as those Israeli strikes on Lebanon really ratchet these tensions up higher. We have that seen that response as well to the preemptive strike on Hezbollah. So each of the sides saying the operations are over for now, but certainly we know that things can change very quickly in this area and in these markets, Shery.
Haidi, not surprising, our next guest says an increasingly defensive posture makes sense. He's also downgraded Japan from overweight to neutral. With us now is Kieran Calder, head of equity research for Asia at UBP. Great to have you with us. Defensive, despite the fact that we're expecting that rate cut from the Fed. What does defensive look like to you?
Yeah, good morning. So actually defensive because we're expecting rate cuts from the Fed. And I mean, the background is so obviously on the weekend, it's game on for rate cuts, probably starting next month. And if we look at the last 5 aggressive rate hike cycles, when rates started getting cut, there's only two of those, 2 out of 5, where we didn't have recession within 8 months. And one, we were already in recession for 7 months in 1974, and then 1995 was the soft landing. So the Fed is always aiming for a soft landing, and it's pretty rare. So we think certainly given we expect a soft landing as does the market, but given year-to-date performance from markets which are near all-time highs, we think it makes sense to be increasingly defensive into the beginning of rate cuts.
Does a macroeconomic backdrop matter for high-flying stocks like companies like NVIDIA? We're expecting those earnings this week. Would you position still in the tech space in the U.S.?
So there's always idiosyncratic names like NVIDIA. So they're obviously at the forefront of a major potentially mega trend. We're of course closely watching what if they disappoint or not on later this week. So we still like selective names in U.S. tech. But again, if we go back to what sort of sectors and styles outperformed in the only other case of a soft landing after aggressive rate hikes, they were mostly defensive. So in the first 6 months after the rate cut started in 1995, it was healthcare, communication services, which was mostly telcos at that time, financials as well. And by style, it was really quality that was the outperformer in the first 6 to 12 months, and of course a subset of that being dividend consistency, consistent dividend payers. So we think these are the sort of styles and sectors that we would want to be overweight heading into the beginning of this rate cut cycle.
Kieran, what else are you sort of concerned about, right? It feels like the weakness out of China is largely ring-fenced for now. Are there any opportunities that you see as being compelling while valuations are low?
In China?
That's right.
Yeah. So, I mean, so for us, we have a structurally underweight view of China. We think that while the downside may be a little bit limited, they've been pretty aggressive in trying to put in a number of measures, especially to draw a line under the property sector. But for us, we think that there's much not to like still in China, and it's a little bit of a unknown. So we prefer to stay underweight in China.
What about sort of on the other end of the spectrum? Are you still constructive when it comes to India, or are prices just sort of too peaky at this point?
Yeah, so the issue with India is it's always looks expensive, but on the other hand, certainly compared to China, it does tend to deliver in terms of earnings expectations, and there's a much stronger transmission mechanism of GDP growth into earnings growth for the market. So, from that perspective, we like India as in terms of global EM, and we certainly prefer it to China, and we'd always be looking to add on weakness. But as you inferred, it's never and it's not now a cheap market.
These economies are all net oil importers, aren't they? I mean, how closely are you watching the geopolitical tensions in the Middle East and the implications for oil and oil-related stocks?
Yeah, so geopolitical situation obviously over the weekend seemed to have heightened, but maybe but is maybe limited at the moment. So, I mean, for us, this is something that's always in the background. It's obviously something that in the short term can move markets around and contribute to volatility and heighten the volatility that we would expect as the interest rate regimes change around the world. But overall, in the sort of long term, geopolitics is not a main driver of markets, and we try to look past us. Of course, look past it. Of course, if we do get heightened oil prices, then importers of oil like Japan will suffer in terms of higher costs. But again, it's longer term. We don't see that as a major driver of markets.
It's interesting you say that soft landings are rare. Do you sort of rate the likelihood a little bit higher when it comes to Europe? Stocks there are doing quite well again after what was quite a difficult start to August. And I know that you're overweight when it comes to the likes of Switzerland and the UK on the rate environment.
Yeah, so we're kind of so we're overweight those two markets in Europe, but I think Europe proper, as it's defined currently, is we're a little bit more neutral on. The major problem with Europe is earnings. Top line growth. So to get earnings growth in much of Europe, you really need to focus on taking out costs. And given the social structure of most of Europe's economies, that's not always easy. So these are some of the reasons that we're not overweight on on Europe proper, but we think that the specific cases of the UK and Switzerland against the rate cut environment there gives us a sort of tactical opportunity.
And Kieran, before we let you go, I know that we've gone all across the world, but I'm really curious about the Japanese yen and the carry trade unwind that we've seen. I mean, Governor Ueda had to speak in Parliament last week instead of going to Jackson Hole and trying to soothe the international markets. What did you take away from it? And sort of give us your sense of the broader direction and pace of the yen moves.
Yeah, so I mean, and certainly anecdotal evidence suggests it's the unwind is starting to rewind a little bit, but certainly, look, I think the comments that he made at the end of last week were a little bit in contrast to the comments immediately after the rate hike at the beginning of August, where the Bank of Japan, of course it wasn't Ueda, but the Bank of Japan said they would not alter rates when markets are unstable, which by itself is quite an incredible statement because markets are mostly unstable. So I think he kind of tried to lay the case out that they are going to they think that the economy is performing as they expect. The wage hikes are starting to support inflation in Japan, which in turn can support higher rates. But overall, we think they're going to continue to be very, very cautious. You know, I think we would be a little bit surprised if they moved at all during the course of this year. And of course, the you know, if the we see that rates in the U.S. tighten as we expect, then that'll do a lot of the work for the BOJ anyways in terms of the exchange rate.
Yeah, sure, those rate differentials, right? Kieran, Calder, good to have you with us. Thank you so much for all your time, Head of Equity Research for Asia at UBP. Now, coming up next, our exclusive interview with South Korea's Vice Unification Minister on how the U.S. elections could play out for relations with the North. This is Bloomberg.
Believe that. Relative calm is holding in the Middle East after Israel's Sunday bombing raids on southern Lebanon. Israel says it took out thousands of Hezbollah missile launches based on intelligence that the Lebanon-based militant group planned imminent attacks. For more, let's bring in Bloomberg's Michael Heath. So it seems that's the term, right? Relative calm. Is it sort of done for now?
It seems like it, Haidi. I mean, Israel, as you said, conducted those preemptive strikes. Hezbollah subsequently fired about 200 missiles and drones and projectiles as well, which seem to have either been shot down or landed in not too populated places. That said, an Israeli soldier was killed in Hezbollah's firing there, but the head of Hezbollah, Nasrallah, has said that that's basically the end of their first stage of this response, and Israel has said the same. So it does look like calm is descending there, which is quite surprising given that, you know, for a few weeks now, a couple of weeks, we've been sort of building up, waiting for this response from Hezbollah after Israel assassinated one of its senior commanders. So, yeah, I mean, it's sort of a testament to Israel's intelligence that it's managed to preempt this, because it could have been quite a major strike that Hezbollah managed to conduct, and in the end, it looks like it hasn't done much damage at all.
Mike, negotiations in Cairo have started for that potential ceasefire in Gaza, but how feasible is it that we might get any results given the escalating tensions in the region?
Yeah, Shery, it's curious because it doesn't seem to have impacted the negotiations as such. They went ahead as planned, and they've since broken up, and it's kind of quite difficult to get a read on it. Obviously, nothing has been agreed. Hamas seems to be blaming Israel for putting forward new requests. The US, on the other hand, seems to be sort of optimistic that progress is being made. So it is hard to say. They don't seem to have directly influenced each other, even though to some extent they surely have to. I mean, at the end of the day, the way to sort of calm down Israel's northern border with Hezbollah is that Hezbollah has said it will stop firing these missiles once the deal is reached. But by the same token, if Israel feels that it militarily has managed to keep Hezbollah at bay, it's not so worried about that. What's going to happen with those talks now is they're going to continue, the Associated Press is reporting, they're going to continue at a lower level to try and bridge some of the differences, but it still seems to be stuck on a lot of the same issues that we've had before, of Israel wanting to keep some troops in the area to try to stop smuggling of weapons or Hamas fighters going into the north of the Gaza Strip, and Hamas obviously wanting all Israeli troops out, and for this to not only be a ceasefire but the end of the war. So the same issues seem to be at hand. We sort of seem in a bit of a deadlock here.
Bloomberg's Michael Heath there with all of the geopolitical tensions that we continue to watch, especially ahead of the U.S. presidential election. South Korea says it expects to work with whoever it takes to the White House to confront the nuclear threat from North Korea. I spoke with South Korea's Vice Unification Minister Kim Soo-Kyung in her first interview with international media and asked how Seoul is preparing for a new administration in Washington.
Recently, I read the news that the U.S. Democratic Party platform removed the goal of denuclearization of the Korean Peninsula. So people in South Korea is kind of worried what happens after the president election in the U.S., but we strongly believe that our alliance between the U.S. and South Korea is stronger than ever, and regardless of the outcome of the president election, we are going to deter North Korea's threat of nuclear weapons based on the strong alliance between two countries. So we are not that worried about what happens after the U.S. election.
Especially if you look back a few years and under the Trump presidency, we actually saw more dialogue between Washington and Pyongyang. But then at the same time, there was a little bit of concern that Seoul had just been taken out of the equation. Is that a concern that's still around here in South Korea, depending on who wins?
We have believed that we have the strong systematic alliance between two countries. So no matter who is going to be elected, I think, or our government believes strongly that those two countries will closely work together to deter North Korea's nuclear programs. So we are not much worried about it. We are going to take the lead in implementing peace on the Korean Peninsula. We are not going to be ruled out.
The global order seems to be changing now. There's a lot of movement, especially with the ongoing war in Ukraine. It's been really interesting to see the closer relationship between North Korea and Russia. What are Seoul's thoughts about that?
So as you know, recently Russian President Putin visited Pyongyang in 24 years for the first time, and they signed a new treaty and upgraded their bilateral relationship centered on military cooperation. And we are worried that, or there is a deep concern that this kind of military cooperation can happen not only in times of emergency, but also in times of peace. So we are so much worried about it. And we believe that we have to work closely together with the international community and to deter nuclear threats from North Korea, and any kind of military cooperation between those two countries that strengthens the military capacity of North Korea is a violation of UN Security Council resolutions. So we need to work closely together with the international community not to make bad things happen in between those two countries.
North Koreans have tried to escape the regime for a very long time, which is why we've seen so many defectors over the years, and yet that number seems to have sharply dropped. What role does Seoul think that China is playing there?
China is the place where many defectors are going through to come to South Korea. So if China is tightening control over these North Korean people and force them to go back to North Korea, then the number of defectors drops. If China closes their eyes to these North Korean people just go through their land, then we have higher number of defectors. So China is kind of a very important factor in deciding the number of North Korean defectors coming to South Korea. And recently, like defectors from the elite group, we call it, for example, diplomats or students or training company workers who were dispatched abroad. The number of these elite group defectors is now increasing. So this means that there is a high demand for defection, but it is really hard to cross the border because North Korea is tightening control over the borderline. So it is almost impossible to cross the China and North Korea borderlines to defect from North Korea.
South Korea's Vice Unification Minister Soo-Kyung there. Some of the other geopolitical stories that we're tracking this hour. China and the Philippines are trading blame after a Chinese Coast Guard ship collided with a Philippine vessel in a disputed area of the South China Sea. Manila claims its vessel was subject to aggressive and dangerous maneuvers from 8 Chinese ships, including ramming and dousing by water cannons. The incident is the latest in a series that has fueled tensions between the two nations. Ukrainian President Volodymyr Zelensky says Kyiv's incursion into Russia is part of an effort to make Moscow accept a fair peace. Ukrainian forces claim to control over 1,200 square kilometres of territory in its first foreign military offensive inside Russia since World War II. Russia's defence ministry says its troops continue to repel Kyiv's efforts in several areas in the Kursk region. More ahead on the Asia trade. This is Bloomberg. Messaging app Telegram has questioned the grounds for the detention of its CEO. Pavel Durov was taken into custody at a Paris airport over the weekend. Our tech reporter Annabelle Jewellers joins us now. So what do we know?
Well, we do know that Pavel Durov, who's the CEO of Telegram, he established this messaging app with his brother back in 2013. We do know that he's been arrested in France over the weekend at Le Bourget airport, which is on the outskirts of the city, Paris, the capital, of course. And what we're hearing, the reason for this is that he could have failed to take steps to prevent the criminal use or criminal activity of Telegram. Telegram as a messaging app, many people are familiar with it, but it's essentially a little bit lighter touch on content moderation, and so because of that it's also been perceived as an app where people can very easily spread misinformation, disinformation, and that's really catching the eye of a lot of governments worldwide, including the UK, of course, early this month because we had those anti-immigrant riots. That was really spread around on Telegram as well, but France does seem to be taking notice here, and we're hearing that the ministry or agency that was set up to combat violence against minors or younger adults, essentially, of men, they're the ones that could have arrested or issued the arrest warrant for Durov.
What happens now?
So what happens now is that his arrest or detention has already been extended once for a 24-hour period. So that came through late Sunday. It could possibly be extended for up to 96 hours. That's according to the French judicial system. We do understand that he could be looking to face the courts on Monday. And so we'll obviously get more updates at that point. So that's really key from that perspective. We're also starting to hear from key people within this. And one of those is from the Russian government, because Durov is a Russian by birth. We don't know whether he's renounced that citizenship, but they're certainly going to be pushing for his rights, it seems, publicly and perhaps behind the scenes as well.
Annabelle Jewellers there with the latest. We have more ahead on the Asia trade. This is Bloomberg.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. While the task is not complete, we have made a good deal of progress toward that outcome. My confidence has grown that inflation is on a sustainable path back to 2%. Today, the labor market has cooled considerably from its formerly overheated state. The cooling in labor market conditions is unmistakable. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
Jerome Powell speaking there at Jackson Hole. You can see the impact when it comes to trading in the dollar. The dollar index DXY there at pretty close to a year-to-date low at the moment. That's also being dragged lower on account of the stronger yen. So this sort of cycle is really starting to fall into play there. We're clearly seeing yen bulls now emboldened after we heard from Governor Ueda in pretty careful but clear language to Parliament on Friday that rate hikes are still on the table. Let's bring in Khoon, who's the head of Asia Financial Research at ANZ. So, in this way, are all the kind of building blocks in place for a pretty sustained dollar-yen move in the direction that we're seeing, given that we're hearing that both from the Fed and also some, careful but confident narrative from the BOJ as well, despite the recent market turmoil?
Yes, we are approaching something that is very rare, which is policy divergence between the Fed and the BOJ in opposite directions. Now we have the Fed very clear that they're going to begin an easing cycle. And it's going to be a cycle where they'll be cutting anywhere between 200 to 250 basis points by the time we get towards end of next year, whereas the BOJ, I think, is on track to continue to normalize towards at least 1%. So given that backdrop, I think it's reasonable to expect further downside in dollar-yen from here. And even, at today's levels of 143, I think you've got to, assume that based on the narrowing yield gap, we could easily head towards, the mid-130s.
Mid-130s, what's the sort of time frame for getting to that? Because it seems like 140 could quite easily be repeated.
Look, I think the 140 could break, quite soon, because historically, if you look at how the DXY has tended to perform heading into Fed easing cycles, a lot of the weakness tends to be front-loaded heading into the first rate cut. During the easing cycle, how the DXY performs depends on a host of other things, including how the global backdrop is. So, given that the DXY has already had a big move down, I think there's further to go. This front loading, as I mentioned, but once we get into that September rate cut, I think the path from there will probably depend on a lot of other factors. So that 140 level, I think, could potentially even occur before the Fed embarks on its first rate cut.
Zooming out, given the broader direction of travel when it comes to the Fed, is this just positive for Asian currencies? And how much could stronger exports and just the trade picture also help?
In terms of how Asian currencies tended to fare during Fed easing cycles, if you look back at the historical record, it's actually quite mixed. Around half of the time, Asian currencies tend to appreciate, when the Fed starts to cut, and the other half of the time it tends to depreciate. So what this indicates is that the global backdrop is actually more important than whether the Fed is cutting or not, which makes sense because Asia is largely export dependent. If the Fed is cutting because of a recession or a global crisis, that does not help Asian currencies at all. So this is where the view around whether or not the US is going to achieve a soft landing becomes really important. Now, my view is that the US is heading towards a soft landing. I don't see any concrete signs that the US is in danger of going into a recession. Asian exports continue to do extremely well. So this looks like one of the backdrops where heading into this Fed easing cycle, we have a soft landing, we have very strong Asian export growth. That's a very, very favorable backdrop for Asian currencies. So my view is that I think we're set to see a strong rally, rebound in Asian currencies during this Fed easing cycle.
Too favorable, even perhaps for the Chinese yuan? I mean, we've been very much focused on the yen carry trade unwind, but what happens with the Chinese renminbi and if that trade also unwinds?
Look, I think the yuan has also suffered part of the carry trade during the first half of this year. After all, you had the PBOC cutting rates. Growth in the Chinese economy has been quite sluggish. So I think there's also been a huge short position that has been built up in the yuan, not to the same extent as the yen carry trade, but I think most of this is done by exporters. Now with the Fed very clear in that they're going to begin cutting interest rates and the dollar starting to weaken, I think you might start to see an unwinding of this yuan carry trade by the exporter community. By and large, they've been hoarding a lot of their accumulated foreign currency receipts, especially since 2022. They've been converting just the bare minimum because it made sense to keep most of their proceeds in dollars. But now, with the monetary policy dial turning, I think we're going to start to see them converting a lot more, which is going to push dollar CNY and dollar CNH lower.
We have the one-year medium-term lending facility rate decision by the PBOC today. What can we expect from the central bank in China, especially given the moves from the Fed?
We're expecting one more rate cut from the PBOC in Q4, but given that rates already are quite low in China, and we're looking at 10 basis point moves only. So whilst you can argue there's also policy divergence in China, the reality is that we're looking at a 10 basis point rate cut from the PBOC in Q4, whereas we're looking at potentially over this cycle, as I mentioned, 200 to 250 basis points of rate cuts from the Fed. So therefore, I think in this instance, the PBOC easing policy is not going to put any pressure on the yuan at all.
I'm wondering what you think of the impact of the US election in terms of the fiscal outlook for policy from either party, really. Do you see at this point that the Fed narrative is so powerful that the election outcome is going to be ultimately dollar neutral?
Well, there's still a lot of uncertainty around the outlook for 2025, and depending on which party wins, because this will have quite a significant difference, not only in terms of fiscal, but importantly for trade policy as well. And particularly for Asia, this is where it's most sensitive towards. In terms of US fiscal policy, I think on both sides, it looks like there's going to be probably further deterioration on the fiscal position. I think to me, the first test will actually be in January when the debt ceiling needs to be negotiated. I think markets are not really focused on that at the moment, but I think they'll start to zoom in really closely, because there's a risk that if there is no debt ceiling negotiation done in time, there's the risk of potentially lockdowns and the usual political drama that goes around with it that can cause market volatility. So I think that will be the first test.
Khoon, really good to have you with us, Head of Asia Research at ANZ. Economists are growing increasingly pessimistic about the prospects for domestic demand in China as they lower their forecasts on consumption and inflation, among other indicators. For more, let's bring in our Chief North Asia correspondent, Stephen Engel, in Hong Kong. So, Steve, what does this latest Bloomberg survey tell us?
Well, it really tells us what we've been seeing over the last many months, and that is a deceleration or at least a very stagnant Chinese economy, especially when it comes to domestic consumption as it relates to retail sales and the overall spillover effect that we've definitely seen for many months from the ongoing property slump. That has affected, manufacturing of many materials. That's led to 22 consecutive months of factory gate deflation, heading for this month for a 23rd straight month. CPI inflation is weak. Retail sales are not going to meet expectations. They're actually being ratcheted down. The top line of this survey is growth, GDP growth year over year will be 4.9%. So missing that target of around 5%. Well, I guess 4.9% is around 5%, but still below that 5% level. 2025 will be 4.5% and 2026 4.2%. Why? Again, consumption is not there. Retail sales, of course, is a key barometer of consumer spending, is now forecast by these 69 economists surveyed by Bloomberg between August 15th to August 22nd. Retail sales now expected to rise just 4% this year, down from an earlier consensus of 4.5%. 4% for retail sales growth for a full year would be the slowest increase, barring the pandemic, and could throw those years out, since the government began making that data available in 1999. People are cautious. People are not buying big ticket items like cars. They're definitely not buying homes right now. They're waiting for prices to continue to come down. That's why inflation forecasts are also coming down. We're seeing CPI inflation. It's been weak, barely above zero every month this year. 22 straight months of PPI deflation, factory gate, and the forecast for inflation is trimmed. Full year CPI now expected at just 0.5% in China, down from an earlier poll of 0.6%. PPI now not expected to return to positive territory until earlier next year. Previous poll said it was likely to happen later this year. But again, the trends are not looking great. Export growth seen at 5.5% in the current third quarter versus 6% previously. So even exports are coming down. Fourth quarter will decelerate further, according to the survey. Export growth of just 4.4%. One bright spot I'll just add, imports ahead of expected further trade disputes and protectionism between China and the United States. There's been a lot of stockpiling going on.
Unsurprisingly, Steve, that means a lot of economists are calling for the PBOC to do more, right? Will they?
Well, that's the big question as far as how far can they go and will they risk going right now. The survey says obviously we know the PBOC lowered a key policy rate back in July. Survey indicates lenders may cut the 5-year LPR, loan prime rate. That's a key barometer, obviously, for mortgages. They've done so many different moves, some people would say piecemeal approach to trying to stimulate demand in the property sector. It hasn't necessarily picked up. Maybe the rate of price declines has decreased a little bit, but still it's not anywhere near a recovery. So we could see a 10 basis point cut by the end of this year in the 5-year LPR, according to many economists surveyed, instead of just 5 basis points in the previous poll.
Chief North Asia correspondent Stephen Angle there. More ahead on the Asia trade. This is Bloomberg. Scientists and public health officials say the Mpox outbreak in Central Africa could have been avoided. The World Health Organization has now declared it a global health emergency. 575 people have now been confirmed killed in the Democratic Republic of Congo, among many thousands of infections. Let's get more on today's Bloomberg Big Take with our senior editor, Jason Gale. So, Jason, I recall when this first became an issue, it seemed like it was coming under control. There was a vaccine, certainly in Western nations. So how did it get to this point?
Yeah, well, this is a different strain, Heidi. This is the strain known as Clade 1b that is spreading from human to human through close physical contact, including sex, which is something that hadn't been seen before in the Democratic Republic of the Congo. And so that's what's really alarming about this particular outbreak.
I think everybody reeling from the trauma of the COVID-19 pandemic is asking, how bad could this get?
Well, at the moment, there are no vaccines in the DRC, the Democratic Republic of the Congo, to counter this effect. There are also insufficient testing, diagnostics, and surveillance. So right now, it's continuing to spread in a really alarming way and spilling over into neighbouring countries. And as we saw last week, getting into countries like Thailand and Sweden the week before.
The WHO has said in the last 2 years there hasn't been a single penny of donor money invested at a global level controlling Mpox, and we know that the mobilisation of funding and political impetus behind the COVID vaccine is what got us there. That seems unlikely in this situation.
Yeah, so this problem has been brewing for decades. The monkeypox virus has been spilling over and infecting people, often those hunting wild animals, eating them for protein essentially. And for a very long time, this has caused only small outbreaks in villages, but now we're seeing large outbreaks infecting thousands of people in urban areas. And that's what's really concerning about this. And that's why there is such a need right now for the resources, the countermeasures to help African countries contend with this outbreak.
What are those measures? What needs to happen next, according to people that you've spoken to? And I guess, is it likely to happen?
Yeah, well, they certainly do need vaccines. We have vaccinations that were developed for smallpox that offer a very high level of protection after 2 doses for Mpox. Those vaccines aren't being deployed yet and probably won't be for months. Unfortunately, there have been red tape and logistical problems, all kinds of hurdles in getting the vaccines to these countries. They also need to be put into cold storage and to have detailed plans to roll them out. Those steps are yet to be taken, so it may be several months before we can see these countermeasures adequately deployed.
Jason, who are the most vulnerable at this point to get this disease and to actually perish? And what do we know in terms of how widespread it's gotten outside of Africa?
At the moment, Shery, we do know that children are the most vulnerable. They're the ones who tend to get more severely affected, more lesions, and develop a more severe illness because of Mpox, and unfortunately are overrepresented among the fatal cases. At the moment, we don't have much information to believe that the virus this particular strain is spreading widely outside of the Democratic Republic of the Congo and its neighbouring countries. We know that Burundi is heavily affected, but at this stage it doesn't appear to be a global, a disease that's seen globally.
Senior editor Jason Gale there, and you can read the full story of today's big take on the terminal, or also head to Bloomberg.com. We have more ahead on the Asia trade. This is Bloomberg. A little bit of a mixed picture across markets in Asia. We're seeing the Nikkei falling more than 1% right now, being led lower by the likes of healthcare, information tech stocks, as well as financials. Of course, this is curbing 2 sessions of strength in the Japanese market as we see the Japanese yen now strengthening towards that 143 level. And this, of course, really a reaction to what the Fed is doing towards really dollar weakness as well, not to mention, of course, recent comments by Governor Ueda when it comes to more potential rate hikes here in Japan. And we're seeing, of course, those auto stocks here in Japan also moving, the likes of Nissan, for example, falling downgraded to underweight from neutral at JP Morgan. We're also seeing the likes of Yamaha declining, given that shareholders are selling the company shares, and you can see the broad downside in auto stocks right now. But really, it's a big week for Chinese earnings, with many major banks and EV firms set to report. Traders will be looking ahead to results from companies including ICBC, Bank of China, and BYD. Bloomberg earnings reporter Rena Sasaki joins us now with the latest. Should we start with Chinese lenders? What are we expecting?
Yes, so major state-owned policy and commercial banks, including CCB, ICBC, and Bank of China, which President resided over the weekend, and Agricultural Bank of China will be reporting this week. And the margins will be in focus as the lenders are navigating through the weak credit demand, as the sector is still exposed to persistent property crisis, which we will see in results from the China Bankies disappointing earnings this week, and stagnating consumption in China.
We're also expecting earnings from BYD. Of course, we'll be watching this sector very closely.
Yes, so the BYD's the second quarter net income will likely jump 25%, driven by 40% surge in its new energy vehicle sales. And it's the upgraded edition of its very popular SUV model Honor will likely led a strong order intake. Yes, so we're also watching out for any comments on the provisional EU tariff that the company will face at 17%. The spokesperson last week declined comments after its new measures release.
What else are we watching out for? What's on your radar?
Yes, so Sinopec, China's the top oil refinery, will likely report the marginal increase in its first half profit. And we'll also see the Meituan and Li Auto will be reporting this week. So it will be a big the Chinese earnings weeks.
Bloomberg earnings reporter Rena Sasaki. Their big week ahead with for China, of course, with a firm focus on how the economic weakness has been translated into the bottom lines of these companies. We're also watching broader commodities as, of course, we continue to see perhaps a calming of these recent tensions in the Middle East, with both Israel and the Hezbollah side saying that they're sort of completed for now, but still we have seen that rise in oil prices as those Israeli strikes on Lebanon really ratcheted those tensions up higher. We also saw, of course, course, some of these concerns being pulled back when it comes to the supply side. Oil is now just marginally higher for the year, and geopolitical risk has really been a big part of what's aided that. We're also, of course, expecting a rate cut from the Fed next month, as really signalled by Fed Chair Powell in what is perhaps the most decisive communication yet in his speech at Jackson Hole. We're also watching, when it comes to the China side of things, what we see as the impact on the likes of iron ore markets as well as copper markets. We're actually seeing a little bit of upside there for iron ore, about 1.4% higher trading in Singapore, but there has been sort of that resistance around that 100 per tonne level as futures have really retreated as they get closer, a whisker of that level before sort of surrendering those gains, signifying quite a bit of caution still for the outlook. We're also seeing just some broader upside for base metals more broadly as part of that reaction to Jay Powell's speech at Jackson Hole. Shery.
Really not a lot of movement when it comes to U.S. futures. Of course, we saw stocks and bonds rallying on those comments you mentioned. What really caught my attention, the direction of travel is clear, according to Chair Powell. And he also talked about the cooling labor market, of course, very important, the upcoming August jobs report. And we also have two inflation reports. This week, we get the Fed's preferred inflation gauge, the PCE core index. So do watch out for that. As we continue to watch NASDAQ 100 futures, not doing much. We are headed towards NVIDIA earnings, the big one this season. That's it from the Asia trade. The China Open is next. This is Bloomberg.